Why are so many people converting to the Roth IRA in such a fast time this year alone? It's because the Tax Cuts and Jobs Act is about to expire literally next year. The Tax Cut and Jobs Act lowered individual tax rates. However, at the end of 2025, the individual tax rates will revert to their pre-TCJA levels. This means individual tax rates will be 10%, 15%, 25%, 28%, 33%, 35%, and 39.6%. Many of my private financial coaching clients have been doing these conversions, and I've been helping with the correct percentage and being able to figure out the portfolio and trying to have some tax strategies moving forward, because taxes are one of the biggest wealth killers there ever was. You definitely need a specific plan for your unique needs, but in this video I'm going to explain everything and figure out if the Roth conversion is going to be smart for you, which I believe most if not everyone should have at least some portion of their wealth in a Roth. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. Many of the provisions enacted by the TCJA are set to expire at the end of 2025, and while most eyes are fixed on the outcome of the 2024 US presidential election, if Congress doesn't extend the TCJA, then nearly every American will be impacted by the sunsetting provisions. This means that more than $4 trillion in tax increases will take effect January 1st, 2026, charging next year's Congress and administration with the hefty tax of grappling with the tax hikes. For all these reasons, people are jumping ship out of their 401ks and out of their traditional IRAs. Listen to this, which is very important for you and your nest egg.
A key issue for many voters in this presidential election, with the 2017 Tax Cuts and Jobs Act set to expire at the end of 2025, higher taxes may be on the horizon for many taxpayers. Funding Roth IRA retirement accounts is an increasingly popular strategy for some high earners to potentially lower a future tax bite. Sharon Epperson is here. She's got the details on this. Hi, Sharon.
Hey, Becky. You know, Roth retirement accounts are a trade-off. Save pre-tax dollars and lower your current income with a traditional IRA, then pay income tax later when you take the money out. Or pay income taxes now and let your IRA grow tax-free in a Roth account. Well, more investors are choosing to pay now. Roth conversion saw a 46% increase year over year in the second quarter of 2024, according to Fidelity. Shifting money from a pre-tax IRA or 401k to a Roth IRA can lower taxable income in retirement and provide tax-free growth.
The greatest benefit of a Roth IRA conversion is it gives you control over when you realize and pay taxes. For most individuals, they have a huge tax bite when they take money out of their 401k or their IRA because of required minimum distributions.
Now, with a Roth IRA, unlike a traditional IRA, you don't have to take distributions in retirement. So the money can keep growing and withdrawals are tax-free. There aren't any income limits for a Roth conversion, but you do need to pay all the income tax you owe on the money you convert in the year you do it. And that can be a big bill. Also, keep in mind a conversion boosts your adjusted gross income, which could put you in a higher tax bracket, and that may impact your ability to qualify for some tax breaks and possibly trigger higher Medicare premiums. But if you can pay the tax now and you want tax-free retirement savings later, financial advisors say timing the conversion can be key. If you do it during a market pullback, you can convert more shares and have more tax-free growth. If you're in a lower tax bracket, you'll owe less tax on the money you move. And that could be perhaps when you start collecting Social Security or taking required minimum distributions from a traditional IRA or 401k.
So the Roth IRA is obviously the answer, but there's so much more to consider for you specifically. Advisors are focused on estate planning strategies and tax moves such as accelerating income and deferring deductions, because part of the idea here is to look towards the future and taking taxes totally out of the equation by just investing in that Roth IRA, and that's gonna help for later when you're older than 59 and a half and you're able to pull the money out of the Roth IRA totally tax-free. It's not even looked at as income. That's gonna be amazing. But what about right now? What about if you're not 60 years old yet? It's still so important for you to be getting that money into the Roth, but the problem is that if you're putting money into the Roth over the next 10 years and the taxes have gone up, now you're paying higher taxes to put money into the Roth, And so it's so much more important that you get all that in, or get a lot of it in, over this next year. Because we do have to keep in mind that you pay taxes on the money that's going into the Roth IRA ahead of time. You pay just your normal taxes, like out of your paycheck. And so that is the negative, or the con, I guess, for the Roth IRA. You're paying your taxes up front. So if your tax bracket is higher right now and you're a higher income earner, you're paying a lot more in taxes today in order to put that money away. So if we know that those tax brackets are going to rise, right now, while the tax brackets are a little bit lower, is going to be your best bet to be getting that money in there. So watch this next section, because like I've said so many times, the US deficit, as far as the debt that we owe, is just becoming too crazy. And the only way that we're ever gonna start paying this down is gonna be through taxation. Taxes are coming, people. But in this section, she talks about how you can get even more in the Roth. That's gonna be the ultimate hack.
First of all, if you look at our debt and our deficit, you may think there's no way tax rates are going anything but up. So maybe do it now and take advantage of it quickly.
Yeah.
But if you are still working and earning a lot of money, you may be in a higher tax bracket than you would be later. And it'd be great to do it now, but then the markets are at all-time highs.
Right.
So you're going to pay a very fat bill on it. You know, it goes back and forth like the paper or plastic.
It's the timing of it. It's the timing of it. And that's why it's so important for people to think about not only making the conversion, but also maybe thinking of other ways that they could fund a Roth account without having to pay the tax right now. I mean, many people right now are offered a Roth 401k at their jobs, and they have no idea. They could do a traditional IRA, a traditional 401k, or a Roth 401k. So you can forego getting that tax deduction up front, put in after-tax money, and all of that money in your 401k, if it's a Roth 401k, will be growing tax-free.
And by the way, it's nice to be able to look at an account and say, this is what I actually have.
I love that.
Here's what I have, less gosh knows what's happening with taxes.
You know, I'm exactly right there with you. I think because I look at that number and I'm like,
hey, that's a big number.
That's a big number, but that's not
what you're getting.
That's not really what I'm getting. But with the Roth account, if you put in the $23,000 max for this year, or $30,500 if you're 50 or older, all of that money is going in after tax in that Roth 401k. So that's one way to do it. Other people are saying, well, I don't really qualify with my income to put money into a Roth IRA, but if I put it in after tax money and convert it to a Roth, then I'm not really feeling like I'm paying that tax either for the backdoor Roth. And that mega backdoor Roth, where some companies are allowing you to make after-tax 401k contributions and switch that money to a Roth account, you could potentially have $69,000 in that.
Right.
So that's a lot of money when you combine what you put in for your contributions, company matching contributions, the after-tax contribution, all of that together. That's a lot of money.
I've made a couple of videos having to do with the Roth IRA, so watch these to learn more specifically, because these are packed full of information and what to do next on your investing journey.